Hi there, Shingirai here again with another update on portfolio performance over the past week. On a 1 week basis, 3 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from CBAM 1 returning 0.41% up to CBAM 5v2 returning 1.62% in a relatively risk-on week. In terms of main contributors to performance, we've seen some turn of tide in terms of Japanese equities, where we've seen a weaker yen net supporting exports for Japanese economy. And then we've seen cafes and bar chains being able to implement price hikes, which would further support their share prices. And then again, on the political front, we've seen a sweeping win for the incumbent Liberal Democratic Party, and that would see our two positions of Japanese equities up more than 5.7% on a 1 week basis. In terms of detractors from performance, we continue to see headwinds for iShares physical gold, as the non-returning asset has been challenged in a rising interest rate environment. We continue to see weakness again for US government bonds, which are longer dated, as opposed to USD corporate bonds as well, down 0.82%, as investors mild that hot inflation number for the month of June, coming in at 9.1%, which possibly implies a tighter or quicker rate hiking cycle for the Federal Reserve Bank of America. Switching over to a 1 month basis, 1 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from minus 1.74% for CBAM 1 down to minus 4.92% for CBAM 5v2. In terms of main contributors to performance, we continue to see some optimism there for Chinese equities, and that would see all three of our Chinese equity positions up 5.27% rather on the 1 month basis. We continue to see headwinds for gold miners, and that would see 91 Global Gold down minus 14.31%. Again, in a rising interest rate environment, the non-return yielding asset challenged heavily. We continue to see weakness for European equities, which showed as European companies down minus 8.63%. But then again, this has been a general narrative for European equities as they face a rising interest rate environment and also some inflationary pressures from energy prices. And then we also see headwinds there for UK mid-cap equities and US large-cap equities as well.